Happy Monday morning to all my friends and fellow lovers of looking at prices and charts and ideas and opportunities in the market. I have today is Monday, September the 16th. Right now we have the SP 500 pulled up, and on the daily time frame. So we had been talking about this for this past couple weeks, how we would get we were looking for a nice pullback, preferably down to here or here. We had gotten that, and then now's a nice move up. And starting the week off on this weekly open here, it seems to have taken a slight pause in the action. So what's that telling me? Okay, is that telling me, oh, it's going to go up, it's going to go up? Well, it is going up, but it's going up in the hopes of people to buy this upwards movement so that it could do a correction on them too and take their money too. But when price is going up like this, and when it's so close to the highs, when it's like this close to the highs, because look how close you are to the highs right now. You have this high over here. You have this high over here. And where we're at right now, we are so close to both of those highs. Well, what is price telling me? It's telling me that it's giving people that are short a little bit of nervousness, so to speak, because you know they have their stops up here. So if they're betting on the market to go down and they have their ouch moments up here, I would tend to think that the market would just go ahead and take their money. But is the market going to take their money? That's where you have that oh so mighty, oh, well, how much is on the table? I don't know. Somebody knows, but I don't know. But if there's enough money up there, we anticipate them to take those highs out. See, on the weekly, look at this. For the whole year of 2024, we have just been on this upwards trajectory. Okay? And today, we are high. We are at the highs. Now, we have two highs here. A little double top, if you want to call it. How many times have you looked at the chart and you've seen like a double top or an M formation only for it to get broken and then make a move down? I've seen it a lot, especially on lower time frames. I see it all the time. So if I am saying, okay, we have gone this whole year of 2024 so far, 9 months we've just been going straight up on the weekly chart here. And I tell myself, okay, so we're really high. I'm really high in the range. I would be looking to go short on the S&P, at least temporarily, for it to have a cool off somewhere in this region or this region. Just a nice little cool off, take a breather, take a break. Okay. You have a lot of factors in play on attempting to short the SP 500 today. Number one, on the short term, you are so close to the highs that it is just teasing you to want to go a little higher. So you have that going against you. But on the weekly, you have a little bit of a good thing going for you, because being that you are at the top of a range and you are very high, well, you know that you're not absolutely, you're not selling the bottom, so to speak. If I want to buy high, or if I want to buy low and sell high, then I want price to be very high for me to sell. And it's high. There's nothing wrong with taking some off the table at this area. It's so high. This is just personal, I'm speaking. Now, if price had come down here to 4,700, okay, and then I say, oh, well, I'm going to sell down here. That's what the market wants you to do. It wants you to sell at a loss. But this area down here at 4,700, that's where you want to buy, because that's at the lower end of the range. Okay? But your risk is like everything when you're looking to take any kind of position. It's like that story I was saying in a previous video about what I learned from trading dollar yen in the past year. Okay. What I learned was, even though I can be right in a high time frame assessment, and you too personally, you could be correct in your analysis of what something is looking to do on a higher time frame. Higher time frame means bigger movements. Bigger movements doesn't mean that it means bigger profits, but it also means a bigger loss, because it can go further against you than you anticipate. When you're playing the 5-minute time frame and you have an idea and you have a stop here and a take profit here, your stop is not that far away because it's on the 5-minute. Even if it is far away, it's not that far away because you're on the 5-minute time frame. If that makes sense. When you're playing the daily and the weekly, your stop has to be so far away to be able to stay in a move. And that's the kind of the lesson I learned about the dollar yen trades that I was taking earlier this year, was that the goal now, this is personal, is not to necessarily have the absolute perfect execution of a trade, which I have to execute correctly, but to give myself the ability to stay in my idea on a high time frame. Okay? That's the difference between, this is just personal and my style, on whether I win in a position or not, is the mere fact of being able to stay in it. The more like self-thought and self-analysis that I do in my trading journey and my mindset into trading, the more I realize, and I attempt to be very true to myself and the trades that I have had. Okay? Because if you lie to yourself, you're going to get nowhere in this industry. You have to be honest with yourself. So being honest with myself, I look back and I say, okay, what could have been some of the winners that I would have had, and why did I not win my winners, if that makes sense? Because a lot of trades that I have, they did end up playing out, and they did end up winning excellently. So why did I not capitalize on that? It comes, for me personally, it comes down to one simple thing: the ability to stay in the trade. and your size, your position size, how much of your account you're using, your leverage, margin, all those things come into factor when you're considering your being able to stay in the trade or not. Because the goal of the marketplace is to get you out of the trade. See, this is why we're like having a personal journal in a channel can kind of be eye-opening to you as a trader too, because I've talked on this very subject months ago about how, okay, you have to be able to stay in the move. You know, you can't go too heavy at one time because then you'll be knocked out. And the market's goal is to knock you out of your trade. I've said that months ago on personal recordings I've done on this channel. And then I listen now, I think about it now, and my mind remembers, it teaches my horrible brain, you know, oh, don't do negative self-talk. I'm just speaking. That's how I teach myself, by learning from my past mistakes. So I remember talking about that. Well, if the goal of the market is to knock me out of my trade, how do I make it impossible for the market to knock me out of my trade? Okay, I have to trade light. Okay, so I start trading light. Okay, I'm trading light, but okay, some of my positions are still getting stopped out. But then the big idea still comes to fruition. Okay, so another little notch in the belt, so to speak, another little step forward. Well, if that happens, that means I have to trade even lighter. And I have to give myself this immeasurable distance. It cannot be calculated by using the average true range of a stop. It cannot be calculated by a reverse trend line, so to speak. The market it tends to be random at times. For me, a lot of things, it has repeating behaviors. But when it comes to my personal stops, it tends to be random on the range of my stops. So dollar yen taught me that hard lesson this year on being able to handle the ability to stay in a trade. So if I'm looking to take a midterm swing down trade on the SP 500, I'm expecting it to do what? Well, immediately go against me. So why don't I just wait and have my orders at new highs, okay? 5,800, 5,750, 5,700, 5,650. And then let those orders get filled in random areas above me for the eventual slow trade down on the correction. These are kind of thoughts that you tend to tell yourself when you're looking at things, you know, and that's just personal, you know. Am I betting on the S&P going down? No. Not at the moment. Even though we're clearly, as of the past two trading sessions, we have been touching a supply zone, so to speak, on the daily time frame. Right here, we've been tapping this green candle. So that could be a confluence for me to bet down on the S&P. But past experience has shown me that when it's this close to all-time highs, it could very well do another quick stop hunt above and take those highs out. So that's kind of some interesting thoughts and perspective on how I view the market and what kind of position I would be taking on the market. The only thing I'm currently in at the moment is a couple of things, Five Below being one of them, and look at that. It is just a beautiful thing to look at. We've got to look at that gorgeous move up. Tell me I'm crazy on Five Below. Somebody tell me I'm crazy, please. Because on the monthly, we are doing exactly as we had projected. It's a thing of beauty when your analysis plays out. It really is. It gives you more and more confidence of things to come. So we're holding Five Below. We're looking to dump off here 150, 160, 170. We're going to place our 3 sell limits up there. And we're just going to sit on it. And if it goes back down to 70, 65, so be it. It would just be testing this monthly trend we have positioned. But it is absolutely gorgeous the way that it's playing out. Five Below is looking like a thing of beauty. Solely based off going what the chart is telling us. I love everybody. I hope you enjoy my silly rants I do, talking about the marketplace. And we will catch everybody on the next video. Peace.